Do you ever feel like the world of finance is just moving incredibly fast? Like you're always just trying to catch up. Keeping pace, especially with tech, it can feel like a full-time job, honestly. Well, consider us your shortcut for today. Welcome back to the deep dive. Today, we're not just dipping our toes, we are plunging right into the fascinating and, yeah, fast evolving world of AI and financial services. We're looking specifically ahead to 2025. We've got this really comprehensive report here from NVIDIA. It's based on a survey of 600 global financial pros, and it's absolutely packed with insights into how the industry is using AI to, well, transform pretty much everything. So our mission for you today is pretty simple. We're going to unpack the most important trends, the big challenges, and the huge opportunities. We want to give you a clear sense of where finance is genuinely headed with AI. We'll look at what's driving all this investment, what companies are actually doing with AI right now, and what kind of results they're already seeing.
And what's really striking, I mean, right from the start in this report, is the sheer momentum behind generative AI. It's definitely not just a buzzword anymore. We're seeing a huge jump in adoption. Over half of the respondents are now actively using it or seriously assessing it. That's up from just 40% last year. That's a big leap.
Wow.
So this isn't just some fleeting trend. It feels much more like a pivotal technology that's really reshaping the sector's core operations.
Okay, let's get into the money then.
Yeah.
We hear so much about AI, but are these financial institutions really putting their resources where their algorithms are? I mean, are they fully committed, or is some of this still, aspirational?
Oh, they are absolutely committed. The survey findings are, well, pretty unequivocal on this. Financial services companies are investing heavily and strategically, really, to gain that competitive edge. And these aren't just vague investments. They're targeting very specific business goals. Things like improving underwriting accuracy, making customer experiences better, drastically cutting down risk, and obviously maximizing portfolio return.
Like the fundamentals.
Exactly, the cornerstones of their business.
And what do these investments actually look like? Is it just buying more software licenses, or is it something, I guess, more fundamental, changing their tech backbone?
Yeah, that's a really important question. It gets to the infrastructure. A huge chunk of these investments, we're talking serious money, is going straight into computing infrastructure. Companies are essentially building what the report calls AI factories.
AI factories, okay.
Yeah, think of them like specialized high-performance computing centers. They're packed with powerful processors, GPUs mainly, optimized software, all designed to rapidly process, refine, and transform just vast amounts of financial data into these sophisticated AI models.
So it's about building the engine itself.
Precisely. Not just plugging in an app, it's the engine.
And this number here is really striking. 98% of management said they will further increase AI infrastructure spending in 2025. 98%. That's almost universal agreement. What does that really signal for, the competitive landscape? Is this creating a huge gap?
It's a critical point. That level of consensus, well, it suggests AI infrastructure is now seen as completely non-negotiable for future success. It's like, table stakes. It's definitely building a competitive moat, no question. Over half the companies surveyed now see AI as absolutely crucial to their future. It's a strategic lever.
A core part of strategy.
Exactly, a core component of their long-term competitive strategy. So for those not investing right now, yeah, the gap is just going to get wider.
And there's a great example in here, too. PayPal, big online payment platform. They updated their AI infrastructure and saw reductions of up to 70% in cloud costs and 35% faster runtime for data processing. 70% cloud cost reduction is huge. Is that just because they're PayPal, because of their scale? Or can, say, smaller firms expect similar efficiencies? Maybe not 70%, but...
That's a great question. I mean, obviously PayPal's scale leads to those dramatic headline numbers. But the underlying principle, it applies much more broadly. The efficiency gains come from optimizing that AI factory concept we talked about. So even smaller firms, yeah, they can achieve significant proportional savings by modernizing their infrastructure, adopting things like accelerated computing, streamlining their AI pipelines. It's really about working smarter with your compute resources, not just throwing more money at the cloud.
Working smarter, got it. Okay, so with all this capital flowing into the infrastructure, the AI factories, where is all this computing power actually being applied? Are we finally seeing AI move properly out of the lab and into core business operations past the pilot program stage?
Yeah, I think putting it in context, we are definitely seeing a clear maturation of AI use cases. The industry seems to be shifting decisively away from just exploration towards successful, widespread deployment of high-value strategic applications. It feels less like, can we do this? And much more like, okay, how do we scale this effectively across the whole business?
Right. So what are the main workloads then? Where are they focusing this power?
Well, data analytics is still king, really. It's foundational for so many operations. It's used for everything from, sophisticated fraud detection, personalizing services, trying to predict market trends better, managing investment risk more dynamically.
Okay.
But the really big mover year over year has been generative AI. That's now emerged as the second most popular workload. Over half of respondents are either using it or actively assessing it. Its rise has been, well, pretty meteoric.
Meteoric, yeah. The report uses the phrase transformational impact.
Yeah.
What does that actually look like on the ground? Is it just incremental stuff or fundamental changes?
We're definitely beyond incremental improvements now. A significant chunk, 41% of the management level folks, they see AI and Gen AI as genuinely transformational forces. And this isn't about just automating one little task. It's about reimagining entire workflows. So take risk assessment, for example. Instead of just looking back at historical data, AI can now simulate future scenarios based on really complex models, giving predictive insights that were just impossible before.
Okay, that makes sense.
And financial institutions are integrating AI across basically all business functions now. We're seeing big upticks in risk and compliance, marketing, sales, obviously cybersecurity, and operations too. It's deep integration.
Across the value chain.
Yeah, exactly.
We often hear AI pitched as an efficiency tool, cut costs.
Right.
Is the report showing a shift there? Are the benefits moving beyond just cost cutting?
Absolutely. That's a really significant shift highlighted here. While operational efficiencies are definitely still a top benefit and a powerful one, don't get me wrong, we're seeing substantial gains in employee productivity. And maybe more importantly, the creation of entirely new business opportunities. So that really signals AI's evolution. It's moving from just being an efficiency tool to becoming a catalyst for comprehensive business transformation. It's opening up new avenues for growth that just weren't feasible before.
Right. Let's talk cybersecurity. Always huge in finance. The stakes are incredibly high. How's AI impacting that? Is it just defense or more?
It's a critical area, and yeah, it's evolving fast. Cybersecurity actually saw the highest year-over-year growth among all the AI use cases in the survey. More than a third of respondents are now assessing or investing in AI specifically for cyber.
A third, okay.
Which, directly reflects the escalating threat landscape. It's getting more sophisticated out there. It feels like a constant race.
Definitely. And what specific threats is AI tackling? Is it the usual stuff or newer, more complex attacks?
We're seeing AI move into those more complex threat vectors now. For instance, the number of respondents expecting to use AI for spear phishing, those really targeted social engineering attacks, that more than doubled, jumped from 7% to 17%.
Wow, okay.
And we also saw big increases in using AI to combat supply chain attacks and DDoS incidents, where systems get overwhelmed. It really shows a more proactive stance, moving beyond just traditional signature-based detection towards predictive and behavioral analysis, trying to get ahead of the threat.
Getting ahead, right? You mentioned generative AI's meteoric growth earlier. Let's zoom in on that for a bit. How exactly are financial institutions using this powerful new capability?
Yeah, the deployment is happening really quickly. Half of the management respondents said their first generative AI service or application was already deployed.
Half already deployed.
Yeah, and another 28% are planning deployment within the next 6 months.
So the vast majority are either live or nearly live.
Exactly. The industry is moving incredibly fast on this, translating the hype into actual deployed solutions.
Are there specific techniques making this possible, especially doing it safely, given how sensitive finance is?
Yes, very much so. There are a few key techniques being leveraged, things like domain adaptive pre-training.
Okay, what's that?
That's basically customizing a general AI model so it understands specialized financial data and, the specific jargon. Then there's fine-tuning for very specific tasks, and also retrieval augmented generation, or AAG.
AAG, I've heard of that.
Right. That lets the AI ground its answers in a trusted internal knowledge base like the company's own policies or data. These techniques are often used with open source foundation models, and it creates this kind of powerful flywheel for development. It boosts accuracy while really protecting sensitive enterprise information that's crucial in finance.
Absolutely crucial. Okay, so with these techniques, what are the most common Gen AI use cases actually in action?
Well, customer experience and engagement, that includes things like intelligent chatbots, virtual assistants. That was the most common. It actually doubled year over year.
Doubled, okay.
Yeah. And beyond that, generative AI agents for document processing this was measured for the first time in 2024. It hit an impressive 53% adoption straight away.
53% for a new category. That's significant penetration.
It really is.
What about something like creating data for testing? That's often a bottleneck, right?
Yeah.
Especially with privacy rules.
Exactly. That's where synthetic data generation comes in, and it's seeing a big uptick.
Yeah.
It's super useful for testing models and strategies without ever touching sensitive, real-world customer data. Its adoption jumped significantly from 25% up to 46%.
Wow.
Financial firms are using it to train things like fraud detection models, identity verification systems, training them to recognize new complex threats without exposing any live data during that training phase.
So it's like a safe sandbox for training.
Precisely. You can run endless simulations safely.
Okay, and the bottom line question, return on investment, ROI. Where are companies seeing the biggest gains with generative AI specifically? Is it cost savings, new revenue?
Yeah, this is a key takeaway. About a quarter, 25% of respondents reported their highest ROI came from AI-based trading and portfolio optimization.
Trading and portfolio optimization.
Right. Customer experience and engagement also yielded high ROI for 21%. And then report generation, document processing were around 11% each. So it clearly demonstrates tangible financial benefits, both on the top line through new capabilities and in operational efficiency through automation.
What's the kind of secret sauce there for trading and portfolio management? Why such high ROI?
Well, it's a few things. In trading, AI allows for this ultra-low latency analysis of market data. It can spot tiny arbitrage opportunities or complex patterns that humans just can't see or react to fast enough.
Right, speed and complexity.
Exactly. And for portfolio optimization, it's about dynamic rebalancing, running complex scenario models, predicting risk, reacting to market shifts almost instantly. It helps protect against downturns and capitalize on upturns way faster than traditional methods.
Better capital allocation, basically.
Yes, with unprecedented precision and speed.
It's one thing to invest, but another to see real results. So what is the bottom line for these firms using AI? Are they really moving the needle on core metrics?
Well, the primary goal for leaders, as always, is increasing revenue and reducing costs, right?
Sure.
The report shows that almost all survey respondents believe there is clear ROI from AI. Management, in particular, is very optimistic, which suggests a strong data-backed belief in AI's financial potential.
Okay, give us some numbers then. How much are revenues actually going up and costs coming down, according to this?
The numbers are pretty compelling, actually. More than 80% of the management folks predicted a 2x or more return on their AI investments.
2x or more.
Yeah. And nearly 70% of all respondents said AI increased their revenue by 5% or more. And get this, the number reporting a 10 to 20% revenue increase jumped dramatically, from basically 0 in 2023 to 16% in 2024.
Wow, that's a significant jump in higher revenue impact.
It really is. And on the cost side, over 60% said AI helped reduce annual costs by 5% or more. So yeah, significant measurable impacts on the balance sheet.
Is this pace of investment sustainable, though? Or are we seeing a peak before maybe things level off?
It looks absolutely sustainable. Remember that 98% figure? Management saying they'll further increase AI infrastructure spending in 2025.
Right.
This doesn't feel like a one-off investment boom. It seems like an ongoing strategic commitment. And beyond the hardware, talent acquisition really stood out too. There was a 42% year-over-year increase in spending just to hire more AI experts.
Talent more.
Exactly. It highlights the huge demand for skilled people to actually operate these AI factories. It signals a long-term commitment to embedding that expertise inside the organizations.
That's fascinating because, traditionally there have been big hurdles to AI adoption. What about those challenges? Are firms still struggling with data quality, privacy, finding people, budget?
Well, here's where it gets really interesting, actually. Many of the challenges that companies were reporting in previous years, they seem to be declining. Fewer companies reported issues with data and privacy, or not having enough data for model training, or difficulty recruiting, or even lack of AI budget.
Okay, that is interesting. So those common roadblocks are becoming less common.
It suggests a shift maybe from assessment and struggling with the basics towards successful deployment and having overcome some of those initial hurdles.
That's a really positive sign then. For listeners who might still be grappling with those things, what are firms doing differently now? Is it better data governance, better hiring, better tools?
I think it's likely a combination of all three. Firms are definitely investing more heavily in robust data governance frameworks, really treating data like the strategic asset it is. There's also a shift towards internal upskilling programs, not just hiring externally to build those specialized AI teams.
And growing their own talent.
Exactly. And yeah, the tooling has matured significantly. Better MLOps platforms, automated data labeling tools, more accessible development environments. They're making it easier and faster to deploy.
Okay. And with all this sensitive financial data flying around, what about the ethical side? Is there enough focus on responsible AI, explainable AI?
That raises a really important point about responsibility and trust, doesn't it? The report shows a marked increase in commitment to trustworthy, safe, and explainable AI. The percentage of companies launching pilot systems specifically for AI and machine learning governance frameworks, that rose significantly from 21% up to 36%.
Okay, so more focus on governance.
Yes.
Sure.
And given the strict regulations in finance and just the sensitivity of the data, prioritizing those ethical and legal standards isn't just, good practice. It's absolutely crucial for keeping customer trust and avoiding massive regulatory problems.
Absolutely. Before we wrap this up, I noticed a mention of AI being used in ESG, environmental, social, and governance.
Yeah.
How mature is that area? Can you give an example?
Yeah, this is a growing and pretty powerful area, especially in finance. The report shows a notable transition here, too, moving from just pilot systems to actual production capabilities for AML initiatives in ESG and sustainable finance. The number of companies reaching production capabilities in this area more than doubled year over year.
Doubled, okay. And how are they using it?
Well, for example, AI is being used to analyze just huge amounts of unstructured data think company reports, news articles, supply chain information to more accurately assess the ESG risk profile of potential investments. So it helps firms make more informed, more sustainable investment decisions and also helps them comply with all the evolving green finance regulations.
Right, makes sense. Wow, okay, what a deep dive that was into AI and financial services for 2025. We've definitely seen a landscape where AI isn't just some experimental side project anymore. It's a core strategic lever. It's driving huge investments, diversifying operations, and delivering really tangible financial returns.
Yeah, and connecting it to the bigger picture, it's clear the industry is embracing AI not just for efficiency gains, but for fundamental transformation. They're using it to navigate really complex issues like cybersecurity, and there's that increasing focus on doing it ethically and sustainably, too. It feels like a comprehensive shift.
So, what does all this mean for you listening? As AI keeps embedding itself deeper and deeper into financial services, speeding up everything from customer experience to fraud detection, portfolio optimization, think about this. If those AI challenges we talked about are actually receding and investment is soaring, what previously impossible financial innovations might become commonplace in just the next 12 months. How will you leverage this rapidly evolving landscape to stay ahead and drive impact in your own work or your business?